Hi, this is Mike Comey of TFNN and Tiger University. Last week I sent out an email for my upcoming Advanced Candlestick Charting webinar where I showed a recent trade setup in Harmony Gold that was a perfect example of the concepts I'll be teaching in this class. The concepts I'm going to go over during the webinar include how to use candlesticks to find pinpoint entry points for your trades, how to find accurate support and resistance levels, and how to combine other technical indicators with candles to create even more powerful signals. Here we have a long-term chart on Harmony, symbol HMY, and this is a 1-year daily. The one thing that stands out on this chart is the 1250 price point. It's acting as a long-term support and resistance on this stock. As you can see, for the past year, Harmony has repeatedly bounced around this 1250 area. It's acting kind of like a magnet for this stock that it continually wants to go into. You can see that it jumped the creek here, but it continually comes back to test that area over and over again. Now let's zoom into the 3-month daily and take a closer look at the trade setup I sent out last week. The formation that popped on this chart was a morning star, which is a 3-candle bottom reversal pattern. This pattern occurs during an established downtrend. And the first candle of the pattern is a continuation of that downtrend. The second candle is one of indecision, and then the third is a reversal of that trend that closes at least halfway up the body of the first candle. In addition, the longer the first and the third candles are, the more powerful the signal is. And having gaps before or after the star also makes it a more powerful signal. As you can see, we had gaps both before and after the star. So by itself, this is a pretty nice trade setup just based on the candles. But I'm also going to show you how to combine candles with other technical indicators. If we bring the line back showing the 1250 support resistance level, you can see that it perfectly lines up with where our candle formation is. Plus, you can also see we had a cross of the slow stochastic that gave us a third confirming indicator. Many people would have gotten in once they saw the morning star complete, but a patient trader would have waited for a signal confirmation, and you would have gotten in when Harmony came back to fill the gap and test the 1250 area once again. Now, I missed this trade because I didn't see this chart until the 26th, and by that point the risk-reward just wasn't in place. At the point I sent out the email, Harmony was trading up at over $14, and I thought that the short-term trend could be over. So I included a PS in the email saying that if you had taken this example trade, I would recommend raising your stop up. Sure enough, that was the top, and Harmony proceeded down. So why did I say to raise your stops? Well, it's because of the resistance level around $14 that the candles were showing me. Long candle bodies, like we see on these two candles, give us great support and resistance levels, and the two of them together told me to be careful. Now, there was nothing on this chart to say, hey, get out, but I would definitely be careful and not want to give up a 10% gain like this one. Sure enough, the resistance area was right at the middle of those long candles, and I put in a little top on the same day I sent the email. As a confirming indicator, the slow stochastic crossed again the next day, and that would have given you further confirmation, although maybe a bit too late in this case. So that is just one trade example and includes only a few of the techniques that we'll be going over in the webinar, but I hope it shows you how powerful these concepts can be and why it is so important to add them to your skill set. And make sure to sign up for my webinar. You'll find a link on the homepage at tfnn.com or on the front page of Tiger University. And when you sign up by September 16th, you'll also save $20 off the regular price. I look forward to seeing you there. Thanks and good trading.